Welcome to today's edition of the Statler Financial Radio Show. Your financial security is our business. Have a question for the team? Call today, 863-877-1188. That's 863-877-1188.
How much money does the average person spend in retirement? More importantly, the question is, how much will you spend? I'm your host, Danielle J. Martin, and this is the Statler Financial Radio Show. I'm joined by Phillip Statler. He's the founder and president of Statler Financial Services. And today we're going to look at how much money you may need in retirement and talk about why just saving for retirement is only half the battle. So, Phillip, welcome to the show. How are you feeling today?
Hey, I'm doing well today, Danielle. You know, when we think about this past week has been kind of a nice week. So far, we've seen the markets respond favorably to the Fed cutting interest rates by 1/4 point. Now, the question is going to be, is inflation really coming down? And we're not seeing that. And we're going to talk about that a little bit more today in the show, too, how inflation impacts our income. But it is something that people need to be aware of. It's going to benefit folks out there that have credit cards or home equity loans and that type of thing. So we'll see. And it may even help mortgage rates come down a little bit, too. We'll see how that plays out here in the coming months.
That's right, Phillip. Let's start with spending. According to the Bureau of Labor Statistics, the average retiree spends about $5,000 a month. Now, some will spend more, some might even spend less, but either way, let's dive into what it takes to create an overall retirement plan.
Absolutely. So, there's things that we have to take in consideration, right? You got rising cost and longer life spans right now. I mean, people are living longer still. And those things can mean your money has to work harder and more efficiently than ever before. And the old rule of thumb, saving a certain amount of money is really kind of outdated. Today, it's really all about creating that monthly paycheck that's going to last you the rest of your life. And so what that means is we have to look more at spending than what saving is. So the other thing is there's other sources of income, right? It's not just about what you've saved, but Social Security, it contributes to your income plan, though it won't do it alone. You've got to have some help. You got to help it along some. They say that the average payment for Social Security is a little less than $2,000 a month. And so if you say $5,000 is the average amount that retirees spend, and they only get about $2,000 a month in Social Security, well, that leaves a pretty big gap that most families have to fill themselves. And so the real question folks need to ask themselves isn't how much do I need to save? It's how much monthly income can my savings generate? That's the real question, Danielle.
That's right, Phillip. And as we're discussing this, what are some of the biggest risks that we need to prepare for when it comes to creating that monthly paycheck in retirement? Because we're all worried about making sure we don't run out of money.
As I said earlier at the beginning of the show, one of the number one risks is inflation. Even low inflation will eat away at your buying power over time. And unfortunately, the last couple of years, we haven't seen low inflation. We've seen rather high inflation, and we've all felt the sting at the grocery store or, at any store at all. We felt the sting of inflation. And so that really, plays havoc with our fixed income. And so we want to make sure that we're planning for that inflation. Second risk is unexpected cost. Things like healthcare, long-term care, or even a major repair, in your house. So those surprise expenses can potentially derail a poorly built income plan. And finally, Danielle, there's longevity risk, the risk of outliving your money. A 30-year retirement is now a common event, and your income needs to last as long as you're alive.
And Phillip, what can listeners do to help, let's say, turn their savings into reliable income?
Well, again, it all starts with a plan. If you don't have a plan, you don't have anything to follow. It's like when you're going from here to Atlanta, or that's not a good example because it's a straight line, but you're going somewhere and you need to make sure you get there. Well, you plug in the address to your GPS so you have a map to follow. Retirement's the same way. You need to have a map to follow. You may get off course here or there, but you want to get drawn back to the map and the way you need to be going. So starting with a plan, maybe you're fortunate, you have a pension, you've got some investments, and we need to map out how to draw them down efficiently and effective. So looking at creating multiple income streams, this could include things like annuities for guaranteed income, dividend paying stocks, and even looking at optimizing your Social Security benefits to get the most out of it you can. The goal, Danielle, is to build a financial engine that can pay you every month no matter what the market's doing. That's what can help you create that financial stability. This is a perfect time to become more educated on what it takes to create a true retirement income strategy. My team here at Statler Financial, that's what we do. Give us a call and let us help you start that process. The number to call is 863-877-1188. That's 863-877-1188. I'd love to spend 30 minutes with you to see if you're on the right track to the retirement you always dreamed of.
We like to remind you there's no cost or obligation to speak with Phillip and the team at Statler Financial Services. That number, 863-877-1188. That's 863-877-1188. If you're just now joining the show, we're talking with Phillip Statler about ways to help create a retirement paycheck for life. So, Phillip, let's continue the conversation here. What is one of the most important first steps for retirees to take?
You need to know your number, not a generic average, but you need your specific monthly income goal based on your lifestyle and what you want, and not what somebody else has put out there as an average. You need to do the work to make sure that we come up with the right numbers. Don't guess. We help our clients calculate exactly what they'll need, factoring in everything from taxes to healthcare. Then we sit down, we build a plan to bridge the gap between what you have and what you'll need. We really specialize in creating that durable, tax-efficient income strategy. That's part of our core retirement design. And here's the deal. The sooner you create that income plan, the more confident your future could be. The window to get there is right now. Get started today.
If someone is listening today, Phillip, and they have different income sources already, is it still important to have a plan?
Absolutely. It is vitally important that you have a plan in place. And here's the deal. A plan is different than having sources of income or having retirement accounts out there. Having the accounts and drawing from this one or that one, that's not a plan. You need to have a plan in place so you know where your income's coming from month in and month out. And so having that strong retirement income plan helps you stay in control no matter what happens with the market or the economy. And the sooner you take action, the more options you could have to preserve and grow your money. That's the bottom line.
And as we're discussing this, what is one takeaway for listeners who still might be worried that they might not have enough savings or income set aside for retirement?
Well, here's the deal. It's not too late, but you can't afford to wait, right? Hope is not a strategy. Hoping that things work out is just not a strategy. It's the road to failure. We want not hope, but we want a plan in place to make sure you get to where you want to go. Your retirement income is too important to leave to chance. You need a written plan designed to help you deliver predictable income. That's the key to retirement. So here's the deal. What's your number? What's your retirement number? If you have $250,000 or more saved, it's time to stop guessing and start planning. My team and I will help you answer the most important questions Will I have enough income to last my entire retirement? We'll help you calculate your personal retirement income needs, build a strategy with multiple income streams to help protect you from inflation and market swings. Find tax-efficient ways to draw down your savings, keep you more of your hard-earned money in your pocket and not Uncle Sam's. Creating a plan that can help you, it really truly gives you confidence and reassurance for the years ahead. Folks, don't let your retirement become a guessing game. Call us today at 863-877-1188 right now to schedule your free, no obligation, 30-minute phone call to make sure you're on the right track to the retirement you dreamed of. Folks, that's the deal. I want to see you take control of your retirement future today. Call us, 863-877-1188. That's 863-877-1188.
No cost or obligation to speak with Phillip and the team at Statler Financial Services. This is another great reminder to get some assistance. So that number 863-877-1188. And Phillip, before we head out, really want to take the opportunity to express for those who are still on the fence or may still be concerned, what does that first appointment look like with you and your team?
So our first appointment is really a phone call. It's you and I on the phone looking at where you are right now and where do you want to be. In other words, we want to see if you're on the right track to get there. And if you are, that's great. Maybe we give you a few suggestions here or there, what you can do. Or maybe you're not on track. Maybe you're far off and you need some help. That's what we're here for. We want to plug in wherever we can to be of assistance to you to make sure that you can accomplish your goal, having the retirement you always dreamed of. That's the process we want to go through. Now, once we do that, and we've got everything done, and we need our help, then and you need that plan in place. And the next step really is that plan, putting together our core retirement design. And that core retirement design does three things, Danielle. It looks at how much risk you have in your overall portfolio and making sure that the risk you have lines up with the risk you should have based on your current circumstances and your risk tolerance. The second thing we look at is taxes. We want to make sure that folks are paying the least amount of taxes, not today or tomorrow, but over their retirement lifetime. And so we do a lot of planning around taxes and making sure that we're paying the least amount possible, not just today, but over our lifetime and our beneficiary's lifetime. And then lastly is obviously the income plan. We want to make sure our clients have an income plan in place so they know where every dollar is coming from, how much it's going to be, and what the chances are that it doesn't last as long as they want it to, or we can make it last longer or increase the amount they're going to get every month. So a lot of variables there where we sit down with people and walk through the process. And I'd love to do it. It's simple. It's a phone call, 863-877-1188.
There's no cost or obligation to speak with the team at Statler Financial Services. In case you missed that number, here it is, 863-877-1188. That's 863-877-1188. So stop worrying and start planning today. You're listening to the Statler Financial Radio Show. We'll be right back.
Turn your plans of yesterday into yes today. Don't wait another day for a routine checkup of your retirement plans. Call Statler Financial Services, 863-285-3815. That's 863-285-3815.
Who likes uncertainty? Wall Street certainly doesn't. With fears of a potential recession and partisan politics, there's a lot of uncertainty right now. What will your future look like? Will your taxes go up? Will your savings go down? Here in the Sebring area, financial advisor Phillip Statler and the team at Statler Financial Services have seen uncertainty come and go. Phillip can help you create a plan designed to preserve your finances in uncertain times. And it's not a matter of if those uncertain times will show up, but when. Call 863-877-1188 now to meet with Phillip Statler and the team at Statler Financial Services. Call 863-877-1188 and schedule your visit today. 863-877-1188. Advisory services offered through Second Half Financial Partners, LLC, a SEC-registered investment advisor. Investing involves risk, including the potential loss of principal.
Time to retire right. This is the Statler Financial Radio Show.
How much is left on your to-do list this week? What about that honey-do list of chores around the house? It's a mile long, right? I already know. The problem with long lists is that they can overwhelm you and cause you to shut down. So let's keep it simple. Welcome back, everyone, to the Statler Financial Radio Show. I'm your host, Danielle J. Martin, alongside Phillip Statler, the founder and president of Statler Financial Services. Phillip, we're going to be talking now about the 3 topics that people should be having on our retirement planning list. That's what we're going to be talking about today. So let's break it down. What are the top 3 topics?
So I think the top 3 topics that I look at when it comes to planning for your retirement is probably number 1 on the list is income. Where's your income going to come from? How are you going to get the income you need to enjoy your retirement for 20, 25, 30 years down the road, right? That's a long time not to be working and get a paycheck. So we need to have a realistic, a written retirement income plan in place so that we've got that track to run on. We know where our income's coming from, and we're good with the numbers that are coming in there. The second thing is risk. Too many people, when they retire, don't switch gears. They keep doing what they've always been doing, which they put all their money in a growth portfolio. And there's nothing wrong with growth portfolio, but when you're heading into retirement, what you cannot afford to do is to have another 2008 loss hit your portfolio. I'm talking 30 to 50% decline. That's what you can't afford to have done. And so that's where you need to make sure the amount of risk you have in your portfolio is diversified properly between things that are safe, things that are at risk, and then the risk portfolio, make sure it's allocated properly as well. So risk is the second thing. You want to make sure it lines up with the amount of risk you should have heading into retirement. You got to switch gears. The third thing is taxes. I think people actually forget that there's a tax due when they take money out of their retirement accounts. And that number can be big, depending on how much you're taking out. And so we want to be cognizant of that. We want to make sure that you understand that when you pull money out, Uncle Sam is sitting there with his hands out, and he wants his share every time you take money out. So we want to be tax efficient with our portfolios. We want to be tax efficient with our income planning strategies. And we want to be tax efficient with our whole retirement planning process. And so I think these are the 3 main things that need to be on people's retirement planning.
Okay, Phillip, so you mentioned income, risk, and taxes. Now explain, why should these topics be included when we're planning for retirement?
So I think if we look at the number 1 is income, but because let's face it, back in the day, people would have a pension. They would have Social Security, and then they would have whatever they saved. In today's environment, less and less people are going to actually have any kind of pension coming in. I'm going to say probably less than 50% of the folks out there are going to have some kind of pension when they actually retire. And so what that means is it puts a burden on you, the retiree, to put together your own pension plan, making sure that you've got money coming in on a monthly basis. So now we look at Social Security as a big deal, a lot of income coming in. Second thing is we've got to create our own income stream. How do we do that? Well, we do that through our income planning process to make sure that the people have the income they need. We make sure that it's adjusted for inflation to keep up with those type of things, even though that's kind of an unknown out there. But that's the big thing about income planning. I think the other thing is when we look at risk, again, risk needs to line up with where you are in life. And when we get to retirement, it's not the time to be having 100% of your portfolio sitting in the market. And so too many folks head into retirement and they don't switch gears. They don't change the way that they manage their portfolio, look at their portfolio. And that's one of the key aspects of working with somebody, that their primary focus is retirement income planning. It's a different animal, it's a different strategy than when you are working and having to grow your money. So that's a big deal when it comes to risk. And then third is taxes, making sure that, that we're paying the least amount of taxes, not necessarily today, but over your retirement lifetime and over the retirement and the lifetime of your family, to make sure that overall you're paying the least amount of taxes possible. And so we take a look at that, and that's a big part of our core retirement design. And to get started, it's easy, Danielle. All they have to do is give us a call at 863-877-1188 for our core retirement analysis. It's a 30-minute phone call. It's you and I talking about things that are important to you, where you are, where you want to be, and what you're doing yourself to get there, and how we might be able to help you get there faster. Again, that number is 863-877-1188 to schedule your core retirement analysis.
There's also that question that many people have is, how do we know if we've saved enough to retire? It's maybe not the top question, but it's on majority of our minds, is knowing, okay, have I saved enough? The number one thing that we hear in retirees is that they are afraid to run out of money. So how do you teach your clients or help your clients know if they've saved enough to retire?
Well, I think it's, people a lot of times to me ask the wrong question, and they'll ask, do I have enough to retire? And that's really the wrong question. We need to look at it a little differently. We need to look at, what am I going to spend in retirement?
Yeah.
And once we know what we're going to have in expenditures, what does that look like? Then we can work backwards and say, okay, yes, we have enough, or unfortunately, no, you don't have enough. And we need to create a strategy, if we haven't retired yet, to increase that amount, or you got to be willing to live off of less income in retirement. And so, and the one thing I would tell people is this: do things in a realistic manner, right? Don't go in and undercut your expenses. I think, well, I won't have that expense, or I won't have that expense. Folks, it never happens that way. Folks end up usually spending more money in retirement than they anticipated. So make sure when you are putting together that budget that you are realistic about the expenses that you're going to incur, the amount you're going to want for travel, the things you're going to want to buy, that motor home or that boat to go fishing, or that travel trailer. Those are the things you have to be honest with yourself when you're putting together that budget, because that's the biggest downfall I see, is people are not honest with themselves when they create that budget for retirement, Danielle.
That's right. And it kind of leads you to the question of what are my options for generating income in retirement? So I'm not in this space of worry or fear. And so I'm sure you sit down with your clients and give them options on, this is how you can invest. This is other ways you can generate some income. Can you kind of go through those options so we can just remind our listeners, these are some ways that you can generate income in retirement?
Absolutely. So there are various ways when we create an income planning process. I'm a big believer in a bucket approach. We create buckets of money, where we're going to draw from, how long we're going to draw out of that bucket from that standpoint. Here's what I will tell you is that we look at taking everything and diversifying between a couple of different things. One, we want to diversify between things that are principal protected versus at risk in the market. We need both. And so that's the first strategy, is what does that diversification look like? And so that becomes a big deal. One of the things that you have to look at when it comes to income is looking at annuities. They were created for that one specific purpose, is to help folks create the income they're going to need over their lifetime. And there's been a lot of studies done now that have come out and said, look, if I just add a small chunk to the annuity aspect of income, that I can have a bigger withdrawal rate over my lifetime. That's a huge deal. Mm-hmm. So we need to be open to all those things. Now, obviously, when we look at those things, there are pros and cons to everything. I mean, you can be in the stock market, and the pro is you can have some great gains. The con is that, hey, you could be down 20, 30, 40% before you know it. And so that's a big deal. Annuities. Hey, they may be safe and protected from downward losses if you're using index type annuities or fixed type annuities. However, there's some liquidity issues, right? You can't take all your money out at one time. It's you got a strategy there, whether it's a 5-year, 7-year, 10-year aspect, but you got to be willing to hang in there for that period of time. So there's different things that you have to be aware of, the pros and cons of every type of investment vehicle that's out there.
Really quick, as before we head into break, Phillip, if we can just go into how is retirement income planning different from simply planning to take withdrawals? We just recently talked about it a little bit, but there's a difference in a retirement income plan than taking withdrawals from your retirement savings as needed. Can you go into what's the difference?
You're so right, Danielle, because here's the deal. I call people that take their money out and just withdrawals. It's like opening up the junk drawer at home, right? You got a bunch of stuff,
right?
You got a bunch of accounts. You may have this brokerage account over here, this annuity over there. Maybe you got an IRA or 401k over here, and you're taking money from something to meet your needs, but you don't have a plan to put it all together.
Right.
And that's where I look at a bucket approach or guardrail approach to what does that look like? Where's my money coming from? Month in and month out, and for how long is it going to last? And that's the question you need to ask yourself. Do I have it written down? Can I look at it and say, this is where my money's coming from for this period of time before I have to switch buckets? Folks, that's a big deal. And again, that's why I created the core retirement design to help people design that retirement they always dreamed of. Folks, give me a call at 863-877-1188. That's 863-877-1188 to schedule your core retirement analysis.
We like to remind you here on the show, you do not have to plan for retirement alone, so do not hesitate to call Phillip and his team at 863-877-1188. That's 863-877-1188. Now, if you have a healthy balance in your retirement accounts, that's a great job, but a healthy balance isn't an income plan. We're going to explain that coming up next here on the show. We'll be right back.
Needing a second opinion on your retirement plan or to see if you're paying more than your fair share to Uncle Sam? Schedule your complimentary visit today. Text VISIT to 863-877-1188. That's VISIT to 863-877-1188.
Surprise parties can be fun. Financial surprises, not so much, especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Phillip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Phillip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Phillip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit StatlerFinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC registered investment advisor.
I want to help you understand some things. Number one, timing of your RMD, because they could potentially push you into a higher tax bracket. Imagine how fast your savings could shrink if you rack up penalties along with taking regular withdrawals and paying taxes.
Time to retire right. This is the Statler Financial Radio Show.
Welcome back to the Statler Financial Radio Show. I'm your host, Danielle J. Martin, alongside Phillip Statler, the president and founder of Statler Financial Services. Now we're talking about just because you have a healthy balance in your retirement savings account, that doesn't mean that you have an income plan. You still have some work to do. So this is why Phillip is here. Phillip, let's get into some of the risks that we need to be aware of to help preserve our income in retirement.
Absolutely, Danielle. So when we look at income in retirement, it's having that plan in place, right? Where is your money going to come from in retirement? And so I look at it a little differently than a lot of folks do. I look at a bucket approach. Here's one thing I know is that if you have everything in the market, then if the market declines, you have to be willing to take a pay cut over a period of time. And that's not a good place for a retiree to be. Now, I will say this, you need to have some money in the market. No doubt about it. A lot of folks have more money in the market than they should have. A matter of fact, I'm going to say that when we look at a risk scale of 1 to 100, a lot of people come in at their portfolios that are at much higher risk than they should be in retirement. About 60% of the folks out there have too much risk in their portfolio. There's another 25 or 30% that don't have enough risk. They have it all sitting in CDs or all in money market accounts that they have no risk exposure at all. That's not good either. And there's about 10, 15% of the folks, they've got it right. They've got it exactly where they need to be. And so that's what you have to look at when it comes to income planning is what does that diversification look like? How do I have my assets diversified? And do I have a written retirement income plan? If it's not written, then it's not a plan. And you got to have it written down so you have something to follow to see, am I on track for where I need to be? And that, to me, that's a big deal, Danielle.
It is a big deal. And speaking of a big deal, I know we've talked about this multiple times on this show, Phillip, about healthcare. And so what's interesting about healthcare is that the costs are projected to cost hundreds of thousands of dollars in retirement. I know we've heard this many times, but Fidelity estimates that a 65-year-old couple can expect to spend $315,000, that's after tax, throughout retirement, but that's not including long-term care. And I wonder if retirees are prepared for this. So this is why you're here, but how can we prepare them for an expense like this?
So anybody that's listened to my show at any time period at all knows that I'm not a fan of this statistic, right? Because it's a valid point, okay? Fidelity is looking at a couple living, I think, 30 years. And so if you take that math down a little bit, that basically says that you're going to spend, as a couple, $10,500 a year in healthcare. Danielle, I just ran some simple numbers. And if you look at the cost of Medicare, Part B, and then you add in there, the prescription drug coverage for Part D, and then you add in your Medicare supplement, you're almost at $10,500 for a couple right there. So I think they put that big number out there to get people's attention, and it does get people's attention. But again, healthcare costs are like no other, or just like any other cost out there. You have to budget for it. And it all comes down back to that problem of income planning, having that written retirement income plan and using a realistic budget. And these are the numbers that have to be in that budget is your healthcare cost. If you leave that out, you're opening yourself up for failure when it comes to income planning. And we don't want anybody to fail when it comes to income.
There's no cost or obligation to speak with Phillip and his team, so don't hesitate to call that number, 863-877-1188. That's 863-877-1188. You do not have to plan for retirement alone, so you don't have to do that. Phillip, as we continue talking about this topic on the things that you need on your retirement planning list, I want to kind of pivot here on the amount of times that many of us tend to overlook taxes as we're planning for retirement. I think sometimes we're going to wake up one day and be like, it's a dream. You don't have to, we can avoid it someday. How often do people overlook taxes, especially as they're planning for retirement?
Yes, it's funny, Danielle, because probably at least once a year, I'll get a call from somebody that says, hey, Phillip, I'm retiring. So this will be the last year I have to file a tax return. That could be the farthest thing from the truth. Now, it could be that, yes, you are fortunate enough that all you get Social Security, and so maybe you won't have to file a tax return. But that's not, at least that's not the majority of folks I see who have IRAs and have investment accounts. Those folks are pretty much always going to have to file a return and pay taxes. And I think that's what folks forget is that, hey, when you pull money out of your IRA, It's a taxable event.
Right.
And it affects a lot of things. One, obviously, you got to pay tax on that money you pull out. It can affect how much your Social Security is taxable. And so we look at part of our core retirement design is we look at how can we minimize that? Maybe not today, but how can we minimize that over the lifetime that you're going to be here? We want to look at taxes not today, tomorrow, next week, but we want to look at them 25 years from now.
Mm-hmm.
Overall, are you paying less in tax than if you did no planning at all? And a lot of that comes down to looking at Roth conversions, looking at some other avenues that we can use to maybe pay some tax today at a lower rate than what we may have to pay down the road. Again, it takes some planning. It takes some tools to come to those planning processes. But I see too many people that they file a return, they're in a 0% tax bracket, and they're excited. However, eventually they're going to start taking more money out of their IRA, which may bump them up into a higher tax bracket. I hate it when I see people wasting a 0% tax bracket. You could be taking money out of your IRA, maybe paying 0% tax out of it, maybe paying 10% tax on it. It depends on, putting together that plan. And that's, I love to do that to help people minimize their taxes over their lifetime. It can be painful sometimes in the first couple of years if you're having to pay tax and you're not used to it. But if I can pay 10% now, I'd rather do that than have to pay 20, 30% later.
That's right. And as we're speaking on taxes, Phillip, if you can just explain also the difference between tax preparation and having a tax efficient strategy for your retirement income plan, because they're two completely different things.
Two completely different things. You're absolutely correct. So tax preparation is simply a historic event, right? It's taking whatever happened last year and recording it on the tax return and sending it to Uncle Sam and paying or getting a refund, one of the two. And so that's the deal. There's no planning in that. That's just preparing your return. Having a tax efficient strategy is sitting down and being proactive with your planning process. That means looking at what tax rates are this year. What are they next year? What are they going to be in 2026? Does it make sense to take extra money out of tax deferred accounts like IRAs, maybe some annuities, in order to pay some tax today at a lower rate than what I might have to pay later? And it's actually putting together a plan. And so that's one of the things that we do in our core retirement design is we put together a tax plan. How can we reduce our overall taxes? And if we can, eventually get folks in a 0% tax bracket. Obviously, we got to pay some tax somewhere, so we pay it up front at a lower rate so that we don't have to pay anything. Doesn't work for everybody. Everybody's different. So before you start messing around with Roth conversions and tax strategies, make sure you sit down with somebody that's qualified tax professional that can walk you through the process and let you know exactly what the tax impacts are going to be. Example, I met with some clients the other day or prospects the other day. They got blindsided last year because they had this huge tax bill that they weren't expecting. They expected some, but not what they got. Somebody tried to take basically 25% of their IRA and convert to a Roth all at one time. It was painful. Not only that, their Medicare premiums are going to skyrocket this next year in 2025 to the highest they can be. And so that's the other thing you have to be cognizant of is that when you start taking extra money out, your Medicare premium is an income-based premium. If your income goes up too high, your premium is going to go up in the year after you file your tax return. People don't realize that. That's all part of our planning process, Danielle, our core retirement design and income planning process. Folks, give us a call, 863-877-1188. That's 863-877-1188 to get started on your core retirement analysis.
If you have any questions about retirement, do not hesitate to call Phillip and his team at Statler Financial Services. They are here to guide you through a successful retirement. Again, that number is 863-877-1188. That's 863-877-1188. You're listening to the Statler Financial Radio Show. We'll be right back.
Do you have a retirement plan but would like a second opinion? Call Phillip Statler today, 863-285-3815. Statler Financial Services, 863-285-3815.
Surprise parties can be fun.
Surprise!
Financial surprises, not so much, especially when you're retired, like finding out you owe more in taxes than you thought you would, or having to go back to work to make ends meet. Maybe you'll be okay, but why not double check just to be sure? Call Phillip Statler at Statler Financial Services and schedule a no-cost retirement double check at 863-877-1188. Phillip and his team have seen their fair share of surprises over the years and know how to help you avoid them. Call 863-877-1188 to schedule your no-cost retirement double check with Phillip Statler at Statler Financial Services. Don't let a financial surprise derail your retirement dreams. Call 863-877-1188 now. That's 863-877-1188. You can also visit statlerfinancial.com for more info. Advisory services are offered through Second Half Financial Partners, LLC, an SEC registered investment advisor. We've made it back. This is the Statler Financial Radio Show.
Welcome back into the show here. You're listening to the Statler Financial Radio Show. I'm your host, Danielle J. Martin, alongside Phillip Statler. He's the founder and president of Statler Financial Services. Now, we talk a lot about all the risks to your money in retirement, but research from Vanguard indicates that investors often underestimate the risk of cognitive decline. Now, it's a scary risk, and it could rob you of your best judgment, and sometimes it can go unnoticed for years. So with that thought in mind, we want to bring you to our top 5 list for this week. And that is the top 5 scams that you should be aware of. Phillip, I'm looking forward to this conversation today because in retirement, I think sometimes we tend to get a little too relaxed in thinking that we're not going to get targeted.
That's right, we do. And this is a good topic. I think this is good because we've had our shred year. We do our shred event every year, and that helps us get rid of some of the stuff. But it can be hard to talk about some of these things that we're going to talk about today because no one likes to feel like they're foolish or they're naive or they got taken advantage of. So one thing that might make you feel better, though, is that when it comes to those phishing emails, it's actually millennials and Gen Zers who tend to get tricked the most. So it's your kids and grandkids that have fallen for this stuff too. So, they don't actually know everything, and you're not the only one that gets sucked into some of these scams.
That's right. And so when it comes to people making sure that they're not overlooking anything, how have you seen some of these scams or even elder abuse come in your many years helping people with their retirement?
There's been a lot that I've seen over the years. I've seen people click on the wrong thing when it comes to an email and their computer. I had a client that happened to them. They actually didn't click on a link. They got a phone call from somebody saying they were from Microsoft and that they realized there was an issue with her program and that they needed her to log in and go to a certain site. And before she realized what she had done, they had taken over her computer.
Oh, my gosh.
And this was it was like 6, 7 o'clock at night. So remember, older people, even me, that time of year, that time of day, you kind of start to really get tired and you don't think straight. And so that's what happened to her. I've had friends that their parents have got sucked into that scam of gift cards, right? They'd go to Walmart or someplace and they would buy, gift cards. They've told them, hey, we need a $500 gift card for this. And it was actually one of those romance deals where they romance the person. So there are so many things out there when it comes to scams and older folks that we have to have our guards up. We have to be really persistent to doubt a lot of these things. I know we get sucked in because we're lonely. We want somebody to talk to.
Right.
And folks, that is what the scammers really and truly look for, is somebody like that, because they can get their fingers in there and not let go, because they've got you then.
That's right. And Phillip, I want to kind of go through and give our listeners the top 5 list this week that comes from the Commodity Futures Trading Commission. Kind of a different source of information, but they recently issued an advisory warning against a few scams. You actually mentioned it, but just listing them off here: precious metal scams, romance scams, fee scams, and then the other 2 involve prescriptions and Social Security, and that is fake prescription and Social Security scams. These are the top 5. In your experience, Phillip, what's the biggest indicator that you might be dealing with a scammer?
Well, let's look at a couple of things. When we look at the precious metal scams, right, it really starts with that spam email or video forecasting the economic collapse or government seizures or claims to know some hidden secret out there that you don't know about. The message is basically that the only way to survive this pending doom and gloom is by owning precious metals, and seller pressures customers to use their retirement savings to buy coins. That's a big deal. Romance scams, like I said earlier, it happens when fraudsters pose as successful people seeking friendship or romantic relationships online. They may contact their target frequently by calling or texting, but avoid wanting to meet them in person or be seen on a video chat. Conversations eventually turn to money and markets, and that's when you start to feel that pressure. Hey, I need this, I need that. The fee scams, when fraudsters convince their target that they can earn unrealistically high profits in a short amount of time. However, the victim changes their mind and tries to withdraw their money, it's too late. They charge them enormous fees or alleged commissions, and there's nothing there. You talked about the other 2, the fake prescriptions and the Social Security. We look at those, and you think about the fake prescription one, those are harmful to your bank account and to your health. And so if you're buying prescriptions online, please do your homework. Look for the verified Internet Pharmacy Practice site seal of approval from the U.S. Association of Board of Pharmacies, and talk to your doctor if you're unusually, if you're having any unusual side effects or your health conditions don't improve. I can't imagine, not only have you been taken advantage of, but your health suffers because of it. And the last was the Social Security scam. It involves trying to get you to give out your Social Security number. And they may threaten to suspend your benefits unless you provide additional information. Folks, if it's the Social Security Administration calling you, they have your number. They don't need you to give it to them. And so, folks, don't give your Social Security number out over the phone to somebody just calling you. That is a very dangerous thing to be doing. And it happens every day, Danielle.
Right. And Phillip, I'm glad we're kind of going over these so people can get very familiar of what to look out for. So if you feel like you might be dealing with a scammer, Phillip, what advice should you give our listeners? What should they do in that situation?
So I think that one is not so much how do you deal with them, but first you have to understand that you're being scammed, right? And so I think sometimes someone is forceful in trying to get you to hand over money. That should be a huge red flag. If somebody you don't know starts asking you for information that you normally wouldn't give somebody off the street, and they're pushy about it, and that we need to take as something that is a scam. We need to be very protective of our information and not just be giving it out today on the phone.
And Phillip, when we're going to add actually another scam to discuss today, this might come out as a surprise for everyone, but the family caregiver scam. This is a tough one, but when you have a relative or an acquaintance take advantage of someone vulnerable, how can working with a financial professional help provide some protection when it comes to this?
So, that's a tough one, because especially if it's a family member, and it's hard to deal with on both sides, not just you, the person that's being taken advantage of, but even on the other side, from the professional side. At what point does a professional step in and help, right? At what point can we? And because we see it sometimes where, now all of a sudden we have a family member that's there to help give care, or we have a caregiver we can see that's taking advantage of somebody. You need to call the authorities. They can help you investigate and get you the help you need in order to get out of that situation, because that is a very hard position to be in, Danielle.
That's right, Phillip. And as we're wrapping up our show today, whether we're dealing with fraudsters, market volatility, taxes, high healthcare costs, or inflation, let's remind our listeners, how can a simple plan, help make sure that our money will last?
Well, I think having a plan is a big deal. And so making sure that we don't lose what we have. And I think we kind of skipped over a little thing here that I want to bring to everybody's attention. And here's just some tips that you may want to take into consideration for helping you be more protective. Never make a payment or give sensitive information to anybody online that you've only met online. You've never seen them face to face, so you've never sat down with them. Before making any investments, get a second opinion. Talk it over with a financial advisor, a trusted friend, or a family member. Don't trade in markets or products that you don't understand. And if somebody calls you out of the blue, hang up. These are big things, because what happens if those guys get a hold of you and your money, they can wipe you out. I've seen it happen, and it's an unfortunate situation, because when it happens, usually you can't get that money back. And so we want to make sure that we're doing the best we can with what we have to make sure our money lasts as long as we need it to. And again, Danielle, that's why I created the Core Retirement Design, to help people design that retirement they always dreamed of, to make sure that they're paying the least amount of taxes, that they have the income they're going to need day in and day out. Then give us a call at 863-877-1188 to schedule their Core Retirement Design. And that's a big deal. I want to make sure people understand that having these things in order help you fight against things like scams and fraudsters who try to take advantage of you. Again, give us a call at 863-877-1188 to schedule your Core Retirement Analysis.
You don't have to plan for retirement alone. Get some assistance, get some help. Call the number 863-877-1188. We are grateful that you are listening to the Statler Financial Radio Show. We'll see you guys next week. Have a great one.
Advisory services offered through Second Half Financial Partners, LLC, a SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine what investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. This radio show is a paid placement.